As a real estate investor, you are probably wondering whether it's more profitable to rent your property for short-term accommodation or long-term residency. Renting short-term can be profitable in some cases, but it often comes with higher costs and greater risks compared to long-term renting. As 30-year experienced wealth managers, we have observed the dynamics, costs, and risks involved in both strategies, so let's have a look together. When it comes to short-term rentals, the first consideration that must be made is the high level of competition in Dubai's hospitality field. Dubai has 591 hotels and 193 hotel apartments with respectively 117,000 hotel rooms and 25,000 hotel apartments, and a hosting capacity of 52 million visitors every year. The weather is attractive for tourists only for 8 months a year and becomes harsh and unbearable in the following 4 months. So an optimistic occupancy rate for a tourist accommodation would be only 255 days a year. A nice unfurnished one-bedroom apartment in Dubai Marina can currently be rented long-term for around 100,000 dirhams a year, equivalent to 274 dirhams per day. The same apartment could be rented as short-term accommodation for 400 dirhams per night, which might seem a much more profitable option. But let's take a look at the costs associated with short-term renting. DTCM license, DIWA, internet, air conditioning, housing fees, furniture depreciation costs. The total amount of these expenses is around 25,000 dirhams a year. Additionally, there is a 20% fee applied by the short-term accommodation management agencies on the daily price of the accommodation. Considering an optimistic occupation rate of 255 days a year at 400 dirhams per night, the yearly return would be 102,000 dirhams. But when subtracting the 20% agency fee and the 25,000 dirhams in fixed costs, the end result is 56,600 dirhams in yearly return. These results are not guaranteed because there is no way to predict the occupancy rate of the property. The real return can only be calculated at the end of the year, and it will probably vary in the years to come. Additionally, short-term renting comes with a series of risks and collaterals, like damages to the property or noise complaints, that cannot be predicted or controlled because of reduced tenant screening. Meanwhile, the same property rented long-term could generate a guaranteed and predictable return of 93,000 dirhams a year after expenses. A long-term rental strategy is the only way to have a steady yield from your real estate investments because vacancies are reduced. Risk of damages is reduced thanks to a thorough tenant screening. All the utilities are connected in the tenant's name. The landlord can enjoy a stress-free passive income. If you would like to know more about how to maximize the yield of your real estate portfolio, book a free consultation with us by clicking the link in the description. Over 200 investors have entrusted MMP to manage their Dubai real estate investments. As a result, they are now enjoying a stress-free passive income thanks to our property management service. Visit our website and book a free consultation with one of our property managers. We will contact you as soon as possible to set up an appointment and evaluate how we can maximize your real estate investment return.